You're watching, all of this going down, liquidity being sucked out of the market, the challenges of the or not looming, but the bear market that we are in. What's it like to work in a DAO and navigate some of these ongoing challenges in the global economy right now?
Yeah, so it was a lot more fun when things were up only.
Good thing, good that we got that out of the way. Welcome everyone to Degens for a Brighter Future. I'm your host Jorge, and I'm here with the man, the animal, the machine himself, Weso, the lead developer from Beefy Finance. If you're not familiar with Beefy Finance, it is one of the largest auto compounders and DeFi product providers in the entire space, having had a TVL of over $1.5 billion in the bear market and still holding an incredibly respectable $361 million in total value locks. Weso's come here with a lot on his mind. I'm extremely excited to pick his brain. I cannot wait. I got the spitfire questions. He took time out of his incredibly busy day before going to SmartCon to come here today. My friend Weso, how are you doing today?
Doing fantastic.
Excellent. I wanted to mention before we start, and nothing in this conversation is financial advice. There might be financial opinion, but anything you do, you should be doing your own research to make your own decisions. And before anyone asks, I am a user of Beefy Finance, so I'm just throwing that out there into the universe. Anyways, with that being said, Weso, the first thing I wanted to ask you is, tell us a little bit about yourself and your journey into the crypto space. And how did you end up coming into the fold at Beefy Finance?
So I've been in crypto since 2017. Really got interested. I like the financial markets, already. And so when, kind of crypto was happening, my cousin told me about it like in 2012. And I'm like, nah, I don't know. I don't know about Bitcoin and all that. And then I got really interested in like reading all about it. And in 2017, I started like my first like sort of like investments into crypto and just kind of trading and doing the same kind of things I was doing with stocks, obviously within cryptocurrencies. Mm-hmm. At that time, I had a few ideas, and I was always like trying to, develop my own like sort of like business. And so I actually learned how to like code in Solidity to write up a few concepts of ideas I had. And obviously, then we all kind of got totally wrecked in 2018 when the market sort of crashed. But that's really when I like started really gaining interest because I got really into Ethereum and how the benefits of like decentralized finance. And so when the whole like boom of DeFi started happening, I got really into like all the different projects and like learning as much as I possibly could about it. When BSC came out, right after like Ethereum became like super, like almost prohibitively expensive, right? It was like $50 a trade. And so if you wanted to do any sort of like yield farm or anything in DeFi, it almost like costs you way too much to even just like place a transaction in order to even like justify the gains you might have got from whatever the transaction was that you're trying to do. So BSC came out, it was like pennies. And there was like a whole bunch of like really unique opportunities out there. PancakeSwap came out, yield farming was like, you go over there and you're like, oh, I could just earn like 1,000% APR interest. And so then I discovered Beefy, right? And not only now you're taking your simple interest, and Beefy's automating the whole like strategy for you of like converting whatever the token is you're getting back into your deposited asset, and it's turning your simple interest into compound interest. And to me, this just kind of like blew my mind as like an automation thing that just made my life like entirely easy. And so I grabbed onto the DAO like a month after it started, just as a community member and like being an avid user. And I realized that you could actually go in and participate as a strategist in the DAO. So if you knew how to write some Solidity code, you could actually go in and like submit your own strategies and start earning a reoccurring income. Mm-hmm. And so I started just shipping some strategies for Beefy. And then I developed my way through there, like actually pulling a lot of my like prior business knowledge into like doing a lot of like the business side stuff for Beefy. And so then I just became, a larger and larger contributor. until I eventually, like, now I'm sort of like leading, I guess, the DAO from a leadership level, moving it forward into like our multi-chain future and the vision side of it. So my journey has been kind of like, user to developer, now to like, leading, or well, helping lead the DAO into the future and beyond.
So interestingly, that you mentioned going from being a user to being a developer. Before I ask you a more serious question, I always find that what makes DeFi such a unique experience, it's not just the yield aggregating opportunities or how you're essentially getting like higher end financial yields and tools that oftentimes might only be like, how do you say, accessible to those who might be an accredited investor or just in the upper echelons of society. And for me, that's always been a very liberating factor. And it just so happens that the experience of going on different yield farms or beefy or auto compounders such as Beefy Finance and just digging through everything, it's a fun experience. At the same time, working on that end, like transitioning from being a user to, well, probably still a user, I would imagine, but also a developer in the space. How would you describe that transition? Do you still find like a lot of joy digging through these different pools?
Yeah, I mean, I don't have as much time, right,
Mm-hmm.
to go through and just like be like the degen DeFi person that I was, but you come from like that user mindset. So if you're developing a product that you use all the time, you start to identify ways to make it better. And so I think Beefy's been a continual iteration against what it was.
Mm-hmm.
So initially, it was just a few LP vaults, and it was just because the founders themselves wanted to automate the whole process of like getting the token and selling it into more like BNB or whatever the LP was that they wanted to farm. And then they were doing it all manually, and these vaults made it so much easier. Then as you start to like go around, you're like, okay, well, there's all this opportunity like everywhere else, like all Avax or Avalanche started to pop up, Polygon became really hot, Phantom became really hot. So we realized the multi-chain opportunity is like out there, not only out there, but to be like the trusted player out in the space.
Mm-hmm.
And so you start to go, okay, as a user, like, hey, I wish my Beefy product that's on PSC was on Polygon. So you just go and ship it on Polygon, right? And then you realize, okay, well, it'd be so much better if I just, instead of having to go to like the exchange and split my token in half and then add liquidity and then come back to Beefy and then put it back in, and then when I want to remove it, then remove it out and remove liquidity and sell them free. Like if I could just zap in with one token, that'd be so much better. So then I created a zap feature. So it's like all of a sudden, like as if you come with the perspective of being a user, you can identify all of those little things, right, that can make the experience that much better. And so I think we have a lot of that, since like everybody that's pretty much a contributor there started out as like a user at some level. And so we're all sort of identifying little things that we'd want to make Beefy better. We'd want on a personal side, and we just make that happen now at an application level.
Yeah, and honestly, one thing that I really do appreciate about Beefy Finance as a user is just how easy it is to use and how easy it is to navigate, and how you could just click from one chain to another chain and to another chain. You can be as degen as you want to be, or you can even do more conservative strategies as well. Uh, the thing I was very, very curious about too is, could you describe the process of going on to multiple chains, like starting from BNB and going to others? And how is that process? Being part of a DAO, is it among the users to vote for the next chain, or is it the developers from other chains reaching out to you, or is it a little bit of both? Or maybe it's something else
So
entirely.
no, actually, I think if you look at each different DeFi protocol, they all handle this differently.
Mm-hmm.
So I think like if you go to Aave, they pretty much have like a vote from the DAO, and the DAO has to like grant them okay to launch the protocol's code on whatever the blockchain is. We decided as a DAO and as like a contributor team that we're complete open source code, so anybody can come and like make changes, and as long as they're safe and they make sense and they fit with our code base, those get accepted into like the Beefy code. There's no reason that that's not the same with like adding another chain, right?
Mm-hmm.
So essentially, we as like for the vaults, for the blockchains, because we're open source code, anybody can kind of come and like launch Beefy as on a different blockchain. And so what we've been doing is, instead of obviously looking for votes, we've been going by user demand and also demand from the networks themselves. So once we became like an established multi-chain product, we've gotten a lot of networks that came over and said, hey, we understand that Beefy is a major part of the DeFi ecosystem. And so we need a trusted yield aggregator as part of our ecosystem. And so would you be interested in Beefy coming to develop on our network? And so we've had multiple of those conversations, and a lot of especially the ones that have launched lately, have been because of those talks with the different networks, and obviously then getting a sort of like a temperature check from our user base, and then us then going and then launching the protocol once there's more of an established ecosystem and it has some of the infrastructure needs in order to launch our protocol. So it really hasn't been a DAO vote per se. It's been more of like taking the stance of it's just adding to our code base. And since we're open source, anybody can go ahead and make changes that they see as improving the Beefy protocol itself.
I see. And I think overall it's the interoperability among several chains that also makes it very attractive, especially if you have the Zap feature, you can move your Beefy token from one chain to another. And I think that that's all a very exciting proposition. Now, speaking of moving Beefy from one chain to another, I wanted to ask you, there's been, a myriad of hacks throughout the years, especially among different bridge protocols. And I was hoping if you could walk me through why you and your team decided to make a bridge. Not that bridges are necessarily bad. And what have you and your team done to make sure that this is a very secure operation, especially with a lot of the skepticism in the market right now? Not necessarily towards Beefy, but just bridges in general.
Yeah, so the bridge itself, we actually have a bridging function on our application, and it's only for right now the Beefy token. The underlying bridge protocol is actually Multichain, which is one of the larger, more trusted bridges. So we actually just are using the underlying contract code. We're not like coming from scratch and building like our own like bridge infrastructure in order to just bridge the Beefy token. What we did notice, and you hit it right on the head, is that like there is this huge opportunity now that the DeFi ecosystem is no longer isolated to, let's say, one network or another, right? So Polygon or Avalanche or BSC, it's actually really this multi-chain ecosystem. So there's like users, though there are some MEXC users like to a specific network, a lot of users are pretty much chain agnostic. So there may be ETH MEXC users, Avalanche MEXC users, Polygon users, but a lot of them are really just yield maxis, right? Where can I find the best yield for whatever my assets are? And so we've identified now that this is only going to get, I think, more like this, right? So there's only going to be more people that want to bridge easy, to have it to be less transactions, to be able to move their assets like with one transaction. And so we've noticed that there's an opportunity for us to partner together with bridge aggregators in order to basically make that process as users completely seamless. So if you have assets on Avalanche, we're going to create the opportunity for you to deposit into a Beefy Vault on Polygon with one click. So essentially removing the barriers of all of those excess trades, all of that bridging, that you would have to do. So like trying to figure out the best rates, then waiting on your funds and all that kind of stuff. So we're going to work and try to like build out all of those complexities for users so that when you come to the Beefy app, you're not like going, okay, well, I'm looking at Beefy on Avalanche. Really, you're looking at Beefy as in the entire crypto ecosystem, saying, okay, where can I move my yields? And it's going to be as easy as possible to do it on Beefy. But as like, when we're talking about like bridge security, obviously there's been, a multitude of issues, right, with bridges. They all pretty much come down to how their operational security is, right? So like if you look at Harmony, they had like essentially two signers that had their that were taken over and approved transactions. There was like an easy code mistake, I think, on the Moonbeam Bridge, Nomad, that I think what was it, like pretty much everybody on that noticed it was exploiting.
Right. That was
a wild
one.
well, it was in the audit, right? Like,
Yeah.
it was actually like the audit itself said, hey, here's the exploit. And then everybody's like, oh, okay, I'll just go and exploit it then again. Which that was crazy. But like, it just seems to me, it's like these like little operational security mistakes, right? Like
Hmm.
things that like are already pointed out, or not taking care of the keys, or not having enough signers. And people are, they're not taking care of, like, let's say that the signers are on the, you have like a multi-sig of 5 signers.
Right.
If 3 signers are correlated in some way and they can all be exploited, then really is that a decentralized multi-sig, right?
Hmm.
So decentralizing your multi-sig really should be about decentralizing also the signers that are on the multi-sig, making sure that they can't have one access point for 3 different signers. If you, like, one person gets taken, or 2 or 3 people get taken with the same scan
Hmm.
or scam, then that puts you at risk. And I think we've seen a lot of that. So I think that just like whole operational security, whether you're bridge or a protocol, has to be just like tightened up in the space. We're seeing a lot of like Web 2 style hacks
Hmm.
still like really taking advantage of Web 3. It's almost like less about the code itself, and we've seen a lot more loss, I think, from people getting phished and stuff like that.
Yeah, I mean, it's interesting you mentioned the Web 2 hacks. I did an interview with Alexandru Lupascu like not too long ago, and it was interesting how he was highlighting how many exploits happen in Web 3 because they're not adding the layer of security on the off-chain side, or the moment
Yeah.
you're signing on to a contract, or the moment you're putting crypto into your wallet, or using a VPN, or any other way to hide that information to avoid hacking, and the importance of keeping information encrypted in general. I could go on about pretty good privacy, PGP, and all of that, but we're gonna avoid that. Stay focused. So
Yeah, I mean, he's absolutely correct though. Like it's crazy the amount of, just if you can just take care of your off-chain stuff, right?
yeah,
Then you're protecting a majority of the time everything on-chain, because people get so obsessed with audits and contract code and everything like that. And we're seeing like just people's keys get taken, and then that's the exploit vector. So, it's removing that risk is more important as part of our safety protocols. Like when we're going and we're talking to underlying protocols, it's, hey, you can't have like these privileged or centralized control functions controlled by like a low signing multisig or by an EOA, because that's a humongous risk. And we've seen all too many times that people like, getting their private keys taken, or a malicious, like, I don't know, employee or a contributor of whatever
hmm
the protocol is, decides to do something because they have access, and you want to remove that access point.
and I think this kind of adds on to that factor. Is like how much more elaborate some of this has become, is how patient some of these people are waiting for these moments to enter and exploit some of these protocols or smart contracts or bridges in general. But I guess what I wanted to follow up with that is that obviously you and your team have chosen to work with Multichain, and also there's a lot of emphasis in Beefy Finance about safety and mitigating risk. And actually, when I walked to the table in the what is it, Untraceables event, when I walked up to the table and the guy said, "Hey, just go check it out," our lead developers chatting, I was extremely refreshed to see that you were just talking about safety, and it was a good timing, especially when only a few days before there was a hack. So, out of curiosity, what are some of the attack vectors that you see happening frequently? What are some things that developers, or maybe some people have approached you to put their farms on Beefy Finance, need to do in order to create a safer experience for the users?
Yeah. So if you come from Web 2, right, like you're a traditional programmer
Hmm.
and you're learning how to ship Solidity code, the one thing you don't really realize is that, or you start to come to a realization pretty quickly, is that a lot of the code is immutable, right? So you
Hmm.
make a mistake on a website or API or something like that, you just go in and like fix the code and then send it back up, right? You make a mistake on immutable code that's on the blockchain, that mistake is there. It's like there's nothing you can do. And so I think this freaks people out. And I think a lot of the protocols that's why we go through a lot of audits. I think actually more important than audits is peer review. So finding really talented peers, so that other protocols, partners, people that you talk to, and having them go through your code, just sort of like doing checks and thinking of every single exploit vector or ways that you've seen in the past, relying on people in the industry with experience. Because you're pretty much going and shipping that code and it can't be replaced. And so I think number one thing we see is that because this is a problem or an issue people see, even though I think it's a pretty cool thing that you can just go ahead and ship immutable code, people make it upgradable, right? So we'll just go and we'll just put an upgradable proxy there. And that way, if we have a mistake or we make a mistake, we can just go and upgrade it. And then their safety controls on that are like a hot wallet address that can just be the proxy admin. And so what this means for anybody who doesn't understand or realize what I'm saying, a proxy admin is in control of that upgradable contract. So essentially, anybody who has control of that private key can go and just upgrade that contract to do whatever they want to do. So let's say that contract controls tens of millions of dollars in funds. They can go and put a malicious function in there that's pretty much says, I take all the funds. And if it's just one hot wallet address that's control of it, then that's a huge risk factor. And so we look for opportunities like that. So are the contracts upgradable? If they are, they really should be time locked. And we have a nice partnership with OpenZeppelin, where we use OpenZeppelin Defender. And anybody who we partner with that has a time lock in place for those upgradable contracts, we'll go ahead and create a alert on OpenZeppelin Defender. And when they schedule a call, so anytime there's some sort of major change that happens, we'll get a pop-up in our Discord, and then we'll go back as the developers and check out exactly what's changing. And so the good thing about the time locks is that you get time, right? So if you have something malicious that's happening, whether it's the protocol themselves or something happened where they get hacked and some of their private keys get taken and somebody's trying to exploit them, we as a protocol, so Beefy as a protocol, has time to react to that. So we require time locks to be in place, more for our user protection than anything. And then we require that you have a significant multi-sig. So we talked a little bit about this earlier, right? You can't control hundreds of millions of dollars in funds having a 2 or 3 signer multi-sig.
Right.
Especially if 2 of those 3 signers share a lot of the same documents, share a lot of the same files, a lot of the same systems. What's the chances that they both get phished? So there's just too many times that we've seen stuff like that happen where they have a low signing multi-sig with a lot of people who have alike things that they're working on, and then somehow both hot wallet addresses get taken, right? Private keys get taken, and then they're exploited. And so we try to look for those opportunities of hey, how can we tighten up their security? If they have any sort of centralized control functions, which means that essentially that they can go and take user funds or move user funds in any sort of way. A lot of times there's really no need for this on contracts, but sometimes there is, sometimes just the contracts themselves, that's how they're built, that there is a possibility for them to be able to move your funds to maybe a different address, that those are time locked so that we don't have to worry about, making sure that never happens. We just, have a little time lock pop up. If that function ever gets called, we can react to it. We actually have in our contracts a function called panic, which we can call, and it pulls all of the funds out of the underlying protocol into our strategy address so that users can safely withdraw. And so many times throughout the last 2 years of Beefy's existence, I actually think next week is 2 years we've been approved.
It'll probably be up by this video will probably be up by then. So happy anniversary.
So with the last 2 years, I mean, there's been plenty of times where we've had to take action and save funds. But really we look at hey, if the underlying contract code has any sort of liability, is there a time lock in place so that we can react in time? Does the underlying protocol own a large portion of the supply of the tokens? Because we don't want you come in here starting to farm whatever the token is, right? Governance token on Beefy. The developers own 50% of the supply.
Right.
And then immediately rug. So we look for all of those really basic ruggable opportunities, and we make sure that those aren't present in the underlying protocol. So we do a lot of like the background research,
Mm-hmm.
though, you know, it's the crypto ethos that you should do your own research. But at least on Beefy, we are doing a lot of the background on all of the protocols that are listed, and then we actually associate every single vault with a safety score, so you can kind of go through the risk assessment. Is it going to be high and permanent loss? Is it a microcap coin? Is it an algo stable? Like, what are the certain risk levels that are associated with this farming position? And then you can make some sort of an intelligent investment decision. And so we're going to continue to, like, obviously maintain our stringentness on security, but also continue to be as transparent as we can with all of the risk associated with all of the independent yield farming opportunities that are on Beefy as well.
Excellent. I mean, it's extremely important that a lot of people who come to the space understand that I don't like calling it the Wild West as much as I like to call it, the land of opportunity. Like, we're so early into this, but by proxy of being early, there's going to be people that make mistakes and learn from them. And then there will be people that will watch other people make mistakes and then learn from those people who are making those mistakes. So I still feel like we're in a bit of the sandbox in that respect.
Yeah. I mean, none of us are infallible, and everybody's looking to get one over on everybody else, right? So you're always like that. You're pretty much sleeping with one eye open as a developer in the space, because somebody's always looking at, okay, like, did you potentially ship a mistake in the contract code? Because if you did, somebody's going to find it and somebody's going to exploit it. And so I think it's important for us to obviously have, automated testing processes, making sure everything's as secure as possible in our code base. But like, as a protocol that's composable, so that we built on top of all those other protocols, I think that, we have to maintain a high level of security when it comes to actually identifying our partners as well.
Absolutely. And now I wanted to kind of turn gears a little bit, and I wanted to touch base on the DAO aspect of Beefy. What's interesting when I chat with various developers across different projects and different chains, there seems to be varying ways to go about DAO governance. And out of curiosity, having so much experience, I was curious, what are the benefits to running an entire protocol through DAO governance, and maybe what are some of the drawbacks that you find?
Yeah. So it's been really refreshing working for a DAO. I come from like the corporate world for quite obviously the first part of my whole career. And so the level of, I'd say, enthusiasm and ambition from contributors and DAOs is much different than in a corporation where you're pretty much just there to earn a paycheck. A lot of our contributors came, like we discussed a little bit earlier, they were users of the protocol. They were enthusiasts of Beefy, and they wanted to do stuff to participate in the DAO and participate as a contributor. And so we identified, obviously, different skill sets, or they identified things that they found interesting, and they started to participate. And then if they're good enough, they pretty much just get a reoccurring role doing whatever they're really good at doing. And so why this is amazing as a DAO is that you find graphic designers, UI designers, people who are really brilliant at UI coding, people who are really brilliant at back-end coding, people who are really brilliant Solidity developers. They all wanted to kind of like put their own stamp on Beefy as a protocol, and then they want to continue to contribute. And so a lot of our contributors that are, we have right now 18 salaried contributors. All of them started out as just free, open source developers, people, or contributors in whatever aspect they wanted to contribute to Beefy, and now they're being paid in like a reoccurring, DAO approved stipend, essentially, to maintain the protocol. And so I think that's the best thing about being part of a DAO, is that everybody's super excited, wants to participate. You have like this also like decentralized decision-making process, right? Where you're not relying on all of one person to make all the decisions for you. You're kind of like doing it as like a group where everybody has a different point of view, a different perspective, and we're all kind of like weighing out those opportunities. Obviously, DAOs themselves are really like, I'd say like infants in this world. So we're really learning, right? Like all of the things that happen, like, how do we become a better DAO? How do we become more decentralized? How do we become more engaging for the DAO members, the community members, to participate? So there's a lot of barriers. Like I think there are a lot of things that we've learned over the last few years. We weren't at first when you never. Everybody says there you can start as a DAO, right? We're going to be a DAO. We're just going to launch as a DAO, but you're not a DAO. You're not a DAO when your founders are still there. When your founders are the ones who are making all the decisions, because really you need them, right? You need them to be that centralized authority. You need them to be the trusted persons on all the contracts, to be the trusted persons on the treasury. So it takes development time. It takes community growth. It takes a lot of things in order for you to become an actual DAO itself. And so we went through this transitory process, I'd say about a year and a half ago, maybe a little bit less than that, maybe like a little bit over a year ago, in which the founders actually stepped away from the protocol. And so we no longer have founder participation at any point at Beefy. And the DAO completely took over. So just the contributors themselves were now the only people, maintaining the protocol, maintaining the code base, maintaining the Discord, maintaining the Telegram. And so now everybody that's participating in Beefy as a DAO just came here as a contributor at some point and is now working towards building it to become bigger and better and one of the larger most vast multi-chain protocols that exist. And so I think, we've learned, okay, well, then how do we decentralize? When we went through that transition, how do you decentralize the protocol? Because it's not just about, okay, well, there's a whole bunch of people who own tokens and now they just kind of vote on, whether or not we spend money on this, right? Which is, I think, what people kind of think about DAOs. But, what about the people like controlling the treasury? Who controls the treasury? So we ended up having a 7-signer multi-sig of all community members that control the treasury transactions. And then to make sure that there's not as much association with the treasury as there is like the development, our development multi-sig, who controls the transactions on our underlying contracts, are separate signers than the treasury. So we don't have like overlay, right? So then now our developer multi-sig has to be, 5 to 7 signers as well. So we have some sort of diversification among signers on the developer multi-sig. Then it's okay, now who owns the Telegram? Who owns the Discord, right? Who's paying the bills? So like all of a sudden it's like you have to be able to decentralize all points of the DAO so that if one person leaves, the DAO doesn't go under, right? The DAO doesn't stop working. Because if one person leaves and the DAO stops working, it's not a DAO. It's a centralized entity. And so I think that becoming a DAO is a lot more challenging than people think, because you have to decentralize every single portion of being a DAO, right? How can multiple people have access to even the domain? Or like, can you put up multiple domains? Is it like, how easy is it to ship up the front end? Like, there's all these different things you have to think about. And so, I'd say that we're becoming and trying to be as best as we can as a DAO, but, we're still learning, we're still growing. There's a lot of ways for us, like, I think it's easier as you're smaller, if you have a pretty large community, but you're a smaller player, to be a little bit more of a DAO structure. As you become larger, right, you have more important decisions, more, I'd say, in real life, right? Non-Web3 organizations that want to work with you. So how do you work with those organizations? What sort of legal structure do you need? How do you make legal decisions? If your personnel continues to increase and, people are now working full-time as part of the DAO, how do you offer benefits to these people? So there's a lot of things to start to think about of like, as you continue to grow, you become continue to become a bigger organization. How do you continue to expand? How do you take care of the legal side? How do you take care of the people side? How do you decentralize all that? So I think it's 100% a learning experience for us. I'd say we've had a ton of challenges. I think, everybody knows the challenges of voting, right? Getting enough participation in the voting ecosystem, making sure that like votes aren't swayed by like one large whale or something like that. Luckily for us, all of our Beefy tokens were sort of were farming allocated within like 30 days of launch, so like fair launched.
Mm-hmm.
So we've actually had over the 2 years, we've had a pretty good distribution of token holders. But I'd say that's like a huge challenge if you're starting out, because then you get like these huge, people owning 10% of the supply or something like that could just sway any sort of DAO vote, right? So how decentralized is that? So I think that there's, out of all the people who say they're DAOs, I'd say only like 10% of them are actually DAOs, and not a lot of them are actually working towards completely decentralization.
If that's definitely that's extremely, extremely, extremely apparent. There's no doubt about it. Now, that isn't to say that the majority are like that, but I mean, at least in my experience, I've definitely seen a few DAOs that are DAOs in name only, and what I think is fascinating is also with a DAO is how you can suddenly have an international, organization that's generating income across like so many different stakeholders, while not having one person that makes all those decisions. I think that's a very fascinating, future. Like, it would be incredibly ideal if in the United States, if instead we just voted on policies instead of people. Like, it would be much more efficient, and we would actually see those things get done for good or for, or for worse. So I've always had a fascination with the governance model itself. Now, for everyone that's watching, we're going to take a brief break. Thank you so much. We will now have a quick word from our sponsor. Are you having a difficult time finding the best trading experience? Well, fear no more, because I have an affiliate link with MEXC Global, one of the largest crypto exchanges in the world. And right now they're featuring 0% maker fees on all spot trades. That's right, 0% on your maker fees. That right there. Not to mention that they also feature some of the best products in the crypto space, including leverage trading, ETFs, and even the ability to copy some of the greatest traders in the world. So what are you waiting for? Check out our affiliate link below. It helps support the channel, and it lets you have a great trading experience. Anyways, thank you so much for watching, and now back to your scheduled program. And we're back. So, Weso, I just wanted to say that was kind of a moving description of DAOs. It's definitely a strong philosophical movement as well. And I think DeFi itself is extremely philosophical. I think now we're in this very interesting regulatory environment. It feels like it's banks and traditional finance versus DeFi. I'm very curious, as far as the future goes, and none of us can really know for sure what regulations are going to come to be, but what do you think is going to happen as DeFi continues to evolve? And what do you think is going to happen to the participants of traditional finance and perhaps the banking sector?
Yes, I think there's a lot of I would say right now, fear tactics getting put into place.
Mm-hmm.
A lot of headline things that are kind of crazy. So I know that we saw everything that was happening with Tornado Cash,
mm-hmm.
Where the news came out that apparently if you ever interacted with Tornado Cash, that you could be gone to prison or something like that. And then they came out with another statement that said, no, that's that's not 100% what we meant. But I think at the point it was now there's a what was the most recent one? The one that's being sued by the CFTC.
Oh yes, that was Oki DAO, and I forget the other one. But anyways, go on.
Yeah, they essentially were saying that if you ever voted on a DAO governance proposal, that you were essentially held liable, in the same sense as if you were a developer of the protocol. And then then they came back out and said, oh, well, no, that's just not the case either. But I think that a lot of these are headline driving things that are trying to, I think, discourage the participation in DeFi and development of DeFi, which is, in my opinion, a terrible step, right,
Mm-hmm.
from a regulatory point of view, because you're discouraging, I think, innovation in the United States itself, right? You want to push it somewhere else. And so I don't think that at the end of the day, that's where everybody sort of wants to go, right? Nobody wants to go, I think, and push away decentralized finance innovation out of the United States and in somewhere else, right, into another country where now they're going to become the leader in decentralized finance, which is such an important thing, especially to the United States. And so I think we'll see. I think more alignment and more clarity when it comes to regulation.
Mm-hmm.
That's not going to be, I think, as stringent as everybody expects it to be. I think that the UST thing kind of really was not a great thing for DeFi, right?
Not at all.
Because really now that is like what regulators are leaning on is the stable coins, right? Like, so I think there was another thing that came out that said, like, if you like issue a stable coin within the United States in the next 2 years, that you can be like up to 5 years in prison or something.
Yeah.
Which is not a bill passed, but another headline, right? So these are like all these like fear headlines, right? That are being put out there. And I think it's to like discourage people from participating, developing, doing things in the United States, to put that fear in everybody. And none of that stuff has passed yet. So who knows if that those will become actions that actually end up getting taken, and then we all have to abide by that sort of regulation. And what it's really done is, I think, made people not want to really participate to U.S. consumers, which completely makes sense, right?
Mm-hmm.
So you see a lot of geofencing, a lot of people that aren't allowing anybody within the U.S. market to participate on their protocol product, at least taking that first step to be sort of on the regulatory eye. I think that it's all this, definitely, internal war between traditional finance and what is becoming of decentralized finance, because it's a huge risk to the traditional finance markets. It's taking a lot of their control and power away from them and putting it in the power of everybody else. And so I think, that's a major risk. And so they're going to fight tooth and nail to, maintain all of that control. What I think is we see, my own personal opinion, right, is that we see some sort of, I think, balance between the traditional structure and what's allowed in sort of decentralized finance, on the guise of obviously consumer protection, user protection, which is fair. I mean, we talked about it being wild, wild west. It is like you come into to DeFi, there's plenty of ways to get burned, right? To get taken, to get rugged, to lose your funds, to get into a terrible Ponzi scheme investment that you shouldn't be in. And so obviously, for the space to grow, that stuff needs to stop, right? So I think at some level, I get the user protection. There's definitely going to be some regulation in regards to making sure that people are protected and want to participate, especially people who don't have any knowledge of the space. And so I think we'll continue to see, especially I think starting with stable coins themselves, we'll start to see regulation kind of for that process. So like, how can we continue to protect users without making like these broad, I think, regulations to start out with, because I think there's still this sort of like wait and see
Right.
what exactly we need to regulate. I also think like the regulators are having a catch-up period. So there's just not a lot of knowledge about like blockchain and DeFi on the regulator side. So much so that when you talk to like other some of the other people in the ecosystem, so other protocols, they're being asked to come and talk to the regulators to sort of like introduce and educate them about what is DeFi.
Right.
Because I think there's a lot of learning on that side too. So like it's an opportunity for us as developers, as people who are contributors, people who are participating in DeFi and want to succeed, to be able to participate in the education and the process of educating the regulators, so that when they are making the laws or they are putting things into place, that they're at least somewhat we're trying to put the education out there and trying to get them to understand what this is all about and why we're doing this. Not that is going to, at the end of the day, end up helping, but we never, like, it might, right? So
Absolutely. I think like it's an interesting debacle, because no one politician, except so far a few like Elizabeth Warren, are really putting their foot on the ground about certain things, because 16% of the country, at least in the United States, is, accesses, uses cryptocurrency. And that number is growing every single day. And I think it becomes a challenging issue because you don't want to alienate a voting base. And also when you're talking about, protection, I think the other challenge here is like, there's a fine line between when you're trying to protect someone or if you're trying to control someone. I don't think,
Yeah.
for example, in this discussion about stablecoins, and don't get me wrong, like that what happened with UST was awful. And for anyone that's watching, if you've lost, a lot of money, try to reach out to friends, family, loved ones. It's a terrible thing to go through. But with that being said, I think it's a very problematic step to say, okay, there can't be a decentralized stablecoin or a derivative of the dollar that is backed by something that is not US debt. I get why the government I don't understand why the US might want a CBDC unless it's for control. Because right now, stablecoins are the biggest, well, not biggest, but they're a fast growing buyer of US debt, which in this world, day and age right now, they need lots of those. And it's a really easy way to get the dollar everywhere else in the world. But before I lose track, sorry, I think it's problematic if they go after innovation. It's like when email came around and the government went after cryptography in the form of PGP and emails. Like, if we didn't have that innovation go through, we wouldn't have emails as we see them today. And everybody would just have access to our information all willy-nilly very easily. But I do want to say, though, that I am optimistic. I think I don't know if you had the chance to watch the hearing with SEC Chairman Gary Gensler. He's still an incredibly skeptical of cryptocurrency, but the vast majority of politicians were very skeptical of his decision making. And I think that it shows that the voting base is reaching out to their senators and their lawmakers and making it known that, hey, we want to participate in these markets and we want to be able to have the alternative from traditional finance if we so choose. It's my money. Why shouldn't I be able to do those things? I feel like, I guess I'm going to end that part of the section because I'm getting way too long-winded, but I really hope that the World Economics Forum, you will own nothing and be happy, which implies that other people will simply own everything else, does not, come into fruition. But anyways.
Well, we need decentralized money.
Yeah.
Right.
Absolutely.
And I mean, that's literally why all of us, a majority of us are here, is to decentralize all of that. Because what's going on right now in traditional finance is horrible and corrupt. Mm-hmm. And so I think there needs to be decentralized money. And, I think there was a quote the other day of that CEO of JP Morgan talking about issuing JP Morgan coin or something like that.
Right.
And it just is, to me, is horrible to think.
Nobody asked for it. Here it is.
The exact same direction that we started with something like that. So hopefully we continue to make progress. And I think the importance of decentralized money is becoming more known by more populace, right?
Right.
And, we can continue that action, right? With everybody that wants to participate just by participating.
Yeah. And I think, and I know it might not be how people feel because we are in a really challenging bear market right now. We're in an environment where globally central banks are tightening and liquidity is being removed. So, I mean, despite all of that, if we look at things in the long term, I think that crypto is going to be set to really make huge changes in the world. I mean, it's amazing that someone in Zimbabwe can get their hands on a US dollar stablecoin and then maybe use Beefy Finance to get maybe 3 or 4% on it, and that's insane when you're in a hyperinflationary market with your own, native currency. So I feel like there's these positive changes that are happening around the world, and for better or for worse, I'm very hopeful, and well, only for better. Why would I say worse? Anyways, very hopeful and optimistic. So now, with all of that being said, I wanted to ask you. So obviously, there is momentum in DeFi, and we're slowly seeing the traditional finance and the banking sector become more fearful, of our space, that it can't be controlled. However, recently there was the Ethereum merge into proof of stake, and there's been a lot of debacles, especially on Twitter, and discussion on the subject of the Ethereum merge and how will it be able to maintain a layer of censorship resistance. I'm curious to ask you your thoughts on the merge, and what do you think about the future of smart contract protocols? Will things be truly censorship resistant or not?
Yeah, I think was there a lot of debate upon like really the grab of the validators, right? So,
Hmm.
like, is there a lot of like the supply of validators being controlled not only in like by one entity, but in like one geographic location, which I think has actually been disproven. But I think even like there was a note that came out from one of the regulators that said that because the large majority of the Ethereum validators were operating in the United States, that pretty much anything that happened within the United States, because it's being validated in the United States, would be part of the under the United States regulation. So it's important to make sure that
Hmm.
not only the participation in the validator ecosystem, but also the diversification amongst like where the validators actually exist continues to be completely decentralized. Um, I think that there's absolutely a complete opportunity for Ethereum to become everything that everybody thought it was going to be. I think even with the merge, actually, I'm really excited about the merge. I think
Hmm.
it was kind of crazy to even just like look at the like amount of power usage that was being used compared to like for proof of work versus proof of stake. And obviously, there's always going to be like obviously, there's the proof of work, there's the Bitcoin proof of work maxis, there's the proof of work Ethereum maxis that are never going to align with what proof of stake is. And there's obviously a bunch of arguments from both sides. But I think the net benefits of moving over to proof of stake, where Ethereum can possibly become deflationary. I think even now, like you look at like the amount of supply being printed in ETH is like nothing compared to what it was when it was proof of work. But even the amount of like energy usage that was been saved uh, has been phenomenal. And I really haven't. I mean, from a developer side of it, I haven't noticed any difference. And I think that a majority, it would have only not worked if a majority of people weren't on board,
Hmm.
and majority of people were on board. So I think as long as we continue to progress, like we've been progressing, as long as we keep decentralizing ourselves and not letting control be taken over by a large percentage, that obviously the continued decentralization of the Ethereum network will be be there.
Yeah, I think so too. And I think what people don't take into account is that, the people who built validators were building them before they were actually validating transactions, and this was a very long process. But now that we do have the actual Ethereum proof of stake chain, now there's going to be a whole gateway of people who are going to run to the gold mines and try to build their own validator and start, trying to get, that initial ETH stake so they can start generating revenue. And I think like over time, if especially if you're buying whatever you need to have and setting up your computer and getting ready to be a validator, you know, you have to sit down and weigh the risk of being a validator on a certain chain and how valuable or the value capture of that coin. So I think over time, I wouldn't be surprised if we saw people who are already being validators on other chains move to Ethereum, because they already have the market share. They already have the network effect. Now, will that be maintained in the long term? Personally, I think so. But obviously, we'll have to see what happens. But, like you, I think like ETH moving to proof of stake was always part of the plan, and the people who were involved, if it made them upset, that's something they should have been aware of, 7 years or something like that in the making. I mean, so anyways, I mean, I'm excited about it personally, and I hope things go well. I think Vitalik is a really, really smart and also kind of funny guy. So not that I met him personally, but seen him speak live, and that's cool. So
I mean, I also think
yeah.
the barrier to entry to becoming a validator is easier, right?
Mm-hmm.
You don't have look at the amount of equipment needed to be to run a miners on Ethereum compared to like what you need to be able to have infrastructure wise to run a validator on Ethereum now. So it's much different, and I think so. It's the barriers to becoming a validator have lessened, and hopefully that helps with the decentralization. Right, more people have access to becoming and running their own validator.
Mm-hmm.
I think it's important. I think if you're a protocol, if you're building on ETH and you're a protocol, you should be running a validator. Everybody should be doing their part to try to decentralize the network. And Beefy runs one. I think everybody should be participating.
Mm-hmm. Yeah, and I completely agree. And I mean, I think the floodgates are opening now. There's definitely a lot of opportunity in the middle of the bear market, especially when we see how fast things have grown in such a small amount of time. I think we're moving faster than the growth of the internet. So I wanted to ask you, obviously developing on a DeFi protocol, you're watching, all of this going down, liquidity being sucked out of the market, the challenges of the, or not looming, but the bear market that we are in. What's it like to work in a DAO and navigate some of these ongoing challenges in the global economy right now?
Yeah, so it was a lot more fun when things were up only.
Good thing. Good that we got that out of the way. Good start.
It was fun because there was just so many people so excited all the time. So there was I think, if you were on Twitter, Telegram, Discord, always groves of people coming in to learn and want to hear what's going on, want to know about this, and now it's you're in this bear market where it's all of that's been sucked up and dried. So, I think it's funny because you go on Twitter, right? And all these Twitter personalities are like, oh, am I just talking to nobody anymore? Because the participation, even with them on Twitter, the influencers, has just gone down. Mm-hmm. And so I think, we're seeing that as on the protocol side, the participation in community, people who are there. I mean, a lot of people, their entry was near the top.
Yeah.
So, they're down bad, right? There's a lot of people that are down a lot from when they bought in and they may have given up or, don't really weren't really understanding what everything was then. They're just trying to get in and make some money and then, now have exited crypto and really never really wanted to know too much about it. Mm-hmm. So I think right now what you're left are with people who, enjoy it, right? We either like the pain or we're here to build something that we believe a lot in, which is decentralized finance. And so, on the protocol side, we've never been busier. As funny as it sounds, everybody right now, because there's no distractions, everybody's building, which means that every single one of your partners wants you to build something for them, which means that our books are we have almost too much work. The amount of developers we have people, every single AMM is making improvements to their AMM. They're doing concentrated liquidity. People are doing liquid staking. They're doing no token models. Everybody's trying to find the edge. Everybody's trying to build for the next run, right? And so, since we're that second layer of composability and we have all of these partnerships, everybody's like, hey, Beefy, you guys ready for this new version of our protocol? And, so that's happening now pretty much everywhere. So as developers, whether you're an exchange or a lending protocol, or whatever part you're doing, if you're still here and you're still building, then you're busy because if you talk to the auditors, they're as busy as ever. So I think everybody's right now heads down building.
Hmm.
I think that's what we've seen, and it's kind of like a good way to just like block out, the market conditions. We just are preparing ourselves and really aren't as affected by price. And we know that if we continue to build usable, products that make everybody's life easier, products that people want to use, that the next cycle people come. The next time I think we get the next 50 million people that want to enter into DeFi, we'll be prepared as a protocol. I think a lot of these people are building really unique, nice, I think, innovative products that are going to be the next level of DeFi,
Hmm.
which is this. I really think it's the amount of composed, like the people building on top of each other, right? Building these really complex, unique products, but making them easier to use. And I think that's what you're going to see in this next run is these I think traditional finance, a lot more of the traditional finance products that you probably wouldn't have had access to, you can now use in a decentralized finance type way.
Yeah, and I want to reiterate that that's for me that's the most important factor here. I think it's going back kind of to what I was saying earlier about protection versus control. It's odd that people are constantly saying, "How can I struggle? Struggle less?" And they never ask like, "How come an institution can purchase, say, I have no idea what Coinbase stock was purchased at by the institution, but let's just for giggles, let's say it was $20. Like they got in and they bought thousands of shares for $20, and then when it goes and it lists publicly at $359 or whatever it was, and suddenly they all get to dump. And how come those guys can get in, you know, early, and then for me, it's just stuff like that that's just incredibly unfair. It's like obviously there's a method to some of this madness. It's just that this wealth, it's not about like trying to create a system that redistributes it better. It's about making a system that makes these things more accessible. And I think ultimately that's what DeFi makes the traditional finance world scared of. It's like suddenly so much liquidity can move to different people, and it's now accessible to people. So I mean, I commend you very much for creating that Zap feature, trying to come up with all these different tools to make DeFi a seamless experience. Like I've used many different protocols, and this is not a shill, not financial advice, but I've always enjoyed using Beefy. Very, very grateful for Beefy. I've had the most fun. I've used a lot of other amazing DeFi protocols, but Beefy is up there. I'm not going to say the most fun, but I've had a lot of fun on it. So, not trying
Yeah.
to alienate anyone here or call out names or anything. Uh, so, I mean, I kind of lost track here. Sorry. So we
We're talking about the archaic accredited investor rules. And
archaic and unfair and ridiculous accredited investor rules. I think like it shouldn't be about protection. It should be accessibility. If you make a decision as an adult, that's your problem. As long as you're not hurting your neighbor or me or any of my friends, that's fine. And
but you can go, you could take a payday loan out, but you can't invest in Coinbase, right?
that's insane. Also, not okay, I can't give financial advice, but anything in life before you do a payday loan. Anyways, you don't need a 25 or 35% loan that you need to pay in a week. Just you don't need that.
Yeah.
So with Beefy Finance, uh, there's so much that has happened. 16 chains are now on board, a bridge, as well as several other tools, being able to purchase crypto directly with your credit card or debit card on the website as well. There's a whole myriad of tools that are there. I was curious, what is next for Beefy Finance? What is the next hill you're trying to climb, perhaps?
So what we saw, I'd say a lot of the competitors, like not even a lot of competitors, a lot of protocols, DeFi protocols,
Mm-hmm.
they think that they have to be everything, right? So you launch an AMM and you got to be a lottery and you got to be a lending protocol and you got to be a concentrated liquidity protocol and you got to be your own aggregator. And so what it ends up doing, this doesn't make sense for anybody who does anything, right? Like you become, you know, master of none, right?
Right.
You may like know a lot about a lot, but you're never an expert. And so I think what we found unique about Beefy is that we could just do this automation thing and make things easier as broadly as we possibly can. But we can become experts in what we do. And so I think people always go, okay, well, you guys going to like launch your own like Beefy stable token, or are you guys going to do a lending thing? And it's like, well, no, that doesn't make sense for us. What makes sense is that we have really strong partnerships. So if we want the composability of Beefy's tokens, right? So the Mu tokens being used as collateral, then let's partner with the lending protocol who wants to utilize Mu tokens as collateral, right? So now you have interest-bearing collateral and essentially like self-repaying loans. So, but that could be part of a partnership level where we don't really have to be the experts on the lending side. We don't have to know about the collateral risks. We don't have to assess every single collateral that comes onto the protocol. We don't have to worry about whether or not there's going to be a bad debt situation. We're just worried about our automation strategies, making sure that we're protected from the underlying protocols, making sure the strategies are well written, that they work as they're supposed to, become experts at that point. And so I think we've decided earlier on that we're not going to be this, conglomerate, not really an expert in anything type corporate, like a DAO organization. We're going to actually be just this expert at automation and make everything easier for everybody else. And what we also identified is that like the future is multi-chain, right? So we already sort of, made that become what Beefy is, which is the multi-chain yield optimizer. So essentially we're on 16 different blockchains. We're going to continue to move along to each of those different networks that have unique farming opportunities to automate, any sort of like yield opportunities that exist on those specific chains. So whether it's, let's say Ethereum or Kava or Talos or, whatever is coming up next, most likely Beefy will be there. But we're also going to like continue to work, like if there's any sort of other unique DeFi products that are getting built. Right now, the hot thing is this concentrated liquidity UniV3 started. Everybody wants to make a concentrated liquidity protocol, whether it's tick-based or what's the Trader Joe one? They're doing like a bucket-based, but they're all this essentially concentrated liquidity, right? So, which is more capital efficient. You can have isolated ranges, make outsized trading returns for less capital, or trading fee returns for like less capital. So I think that there's an opportunity, because obviously that itself is complex, right? I think there's definitely an opportunity for optimizers to come in and make optimization strategies, for those. So I think as DeFi starts to develop more and more, right? So there's now concentrated liquidity. There's potentially cross-chain lending. There's all these opportunities now to really like optimize some sort of yield farming strategies. Beefy will be right there automating the process. So I think what you're going to see for Beefy in the next, let's say, year is going to be not only continual chain expansion, right? So as we become, more networks have more yield farming opportunities, you'll see us moving and building on different networks. I also think you'll just see us like increasing the amount of core products that we have. So whether that's like, liquid staking derivative tokens, or, making these concentrated liquidity optimizations, or just generally doing, traditional AMM, vaults, or, traditional lending vaults, we'll continue to build and continue to build on top of, whatever protocol we can. And so I think that's what you'll see. And then obviously on the UI side, we're trying to make things as easy as possible. So you'll start to see like really easy features. So pretty much zapping in with any token you want to any vault. So if you have ETH and you want to farm Joe USD, you can just do that in one click on Beefy. Beautiful. You don't have to go and do everything. Yeah. And the same thing, you want to do it on, you have AVAX on Avalanche, you want to go farm Matic USDC, you should be able to do that in one click. So trying to like really make the whole, getting in and out of vaults, the yield farming experience just so much easier, giving you as much content as you possibly can. If you've been on Beefy recently, go on the vault page. You can actually, what's really kind of fun is if you go to any sort of the solidly forks, so Velodrome, Dystopia, Cone, Hermes, I think, you can actually go to like the stable pairs on Beefy. So go to a stable vault, and then you can look at the imbalance in the LP position right on Beefy itself.
Mhm.
So when you're going to make your investment decision, you go, okay, there's like 80% of this token and supposedly a stable pair. Maybe it's too imbalanced for me. So we're trying to give you as much educational content on the vault page as possible so you can make the best investment decision as you can as well.
That is awesome. Absolutely fantastic. So for everyone that's watching, and I wanted your closing thoughts. What, we're in this really difficult time. If you were sitting with someone that lost a lot of funds, maybe you're not giving them specific financial advice, or maybe you are, but we don't do that here. But what would you say to people that are in a bad mood or really worried about the space? Maybe there's a lot of FUD in their minds. What would you say to motivate them, or what would you say to get them prepared for whatever's next?
So if you're here, right, and you're still participating in the space, then you have this unique opportunity in front of you to learn. So go out there, go join a community, go join, contribute to a protocol. Take what you do, what you're passionate about, go learn, right? Because the more you participate, the more you can be a part of that community. Even if you can learn to, you don't even have to code, right? If you're good at marketing, there are plenty of protocols that need marketing help. If you're good at just talking to people, there are plenty of protocols that need moderators. If you're good at design, there are plenty of protocols that need design work. The space is in need of really talented people, and there's a lot of people that I think that they, because they don't really know about like DeFi, or they don't know about developing, or they don't know how to code, that they can't participate. I'd say your opportunity right now, your opportunity to get in the know, to really understand what's coming next, is to go be part of the communities. Go contribute in your own way. Go participate. There's actually a lot of ways. People always think like, okay, well, the only way I can make money is by investing in some sort of coin, getting in early, and then selling immediately, right? Because that's like the dream, right? But that's not. I can tell you right now, a majority of people who make it in this space make it because they're building and contributing, right? They get actually paid from the DAO, right? They found another way to earn, or they found a way to make friends in the space who know about things that are coming up, the unique opportunities. So I mean, like, go and participate, be part of a community, be a contributor. I'd say that that's probably more important right now in this type of market than trying to like give you solid like whatever the investment advice, because nobody knows what's going to happen in the market, right? And I can't tell you even in a bull market what actually is going to happen. So anybody who can sell you that they can is wrong. But I can tell you right now that we're not in a bear market for needing talent. I mean, right now, like, we need as much talent as possible, and we would love to have all of the talented contributors come and participate at Beefy, but there are so many protocols like us looking for talented contributors as well. And that's really your golden opportunity, is to get in with one of these DAOs and be a part of a project, especially one that's strong, that's going to be here the next cycle.
Beautiful. Absolutely lovely. Very motivating. I think learning is extremely important. And I'm glad that that's the edge you decided to end on, just because here at Degens for a Brighter Future, everything we do, nothing we do here is to shill. We're always striving to educate people and show everyone how practical this space is. Because in reality, this is an unbelievable opportunity. And when the market is down, in my opinion, that's always been the time to learn, to grow, see what you did wrong, don't repeat it.
Yeah.
And that's it. So, Weso, I just want to say this was an incredible conversation. I am so happy that you took the time to come onto the show and share a little bit of your wisdom with us. And hopefully, I have you on here again. We'll see. But I'm really grateful, and I look forward to seeing everything that Beefy does. You enjoy the rest of your day.
Thanks for having me. Thanks for using us.
Oh, and degen safely.
Yes.
Hey, thank you so much for watching. If you enjoyed that content, please like and subscribe. You should also check out some of our other awesome videos, like our interview with Arnaud Solomon, the CEO of Met Pellerin. We talked about buying crypto without KYC and the issues of modern economics. We also did an awesome interview with Claire Zhang, the head of marketing over at Stratos Network, which is a decentralized storage solution. These videos are awesome and I hope you enjoy them. Anyways, thank you for your time and degen safely.